Hey traders and investors, it's Serge Berger here. What I'm going to take a look at today is what we've seen over the past couple of days, a classic mean reversion move, and how you can spot these kind of moves at least in the first sort of half of when that move starts to occur. In this case, we're going to take a look at the biotechnology sector. We're going to look at the IBB, which is an ETF on the Nasdaq Biotechnology stocks. So if we look at IBB, we're talking about a fairly volatile type of ETF, considering other ETFs out there, sort of at least the broader types aren't this volatile. But of course, that's the nature of the composer of the index, which is obviously biotechnology stocks, and those tend to be fairly volatile. So if we take a look at this index, I drew a very simple 200-day moving average in red, a 100-day in blue, and a 50-day in yellow. If you take a look at the index, you can see that pretty much over the past couple of years, the index has traded in an orderly fashion. That is, if it didn't find, it's been trending higher, and if it didn't find support at the 50-day, then it found support at the next one, which would be the 100-day, and then below that, then it usually fell to the 200-day moving average. At the moment, you can see the stock started topping here as it came to the upper end of a trading channel, and it also built what we consider in technical analysis world basically a head and shoulders formation. You had to squint a little bit, but more or less we had a quasi left shoulder, a head, and a right shoulder, and that led to a slice right through the 50-day moving average last Friday. At that point, the quicker trader would have either certainly liquidated some long positions in the IBB or actually even gone short, as the next logical support then became the 100-day moving average. At this point, we are in fairly neutral territory, so it's a little bit more risky to short the index here. But a better mean reversion move still takes this index towards potentially somewhere around the 200-day moving average, which currently would be somewhere around the $215 area. So you can see that this index does look to have a little bit more, little lower to go, maybe 5, maybe 10%, and I say little, tongue-in-cheek. It all depends on the volatility of the index. But B, you can see that you could have spotted this certainly before the next sort of few percent down move, which is actually taking place right now. That I'm talking about this Monday, the 24th of March. So by looking at the various confluence levels of different technical points coming into play, you can spot these kind of things earlier than a lot of people, and really avoid yourself the pain that you would get on the long side and participate on the short side. So I hope this makes sense. If you got any questions, please let me know, or tweet me at my Twitter handle, which is SteadyTrader. Take care.